Hey everybody, it's Asif Khan, CEO, Editor-in-Chief, and EIEIO over there at Shacknews, and I'm happy to be here bringing you another Shacknews Direct. We're just going to focus on Bubbletron today, which is our game that we launched on January 1st. So it's been officially 6 months since we launched, and it wouldn't be a E-Week or E4 without some sort of development update from Shacknews. So yeah, we are adding a couple of things to Bubbletron today. If you're a user of the game, you'll be happy to know that we're adding more parameters, so there'll be more options for you to be able to, choose what company you want to create and hit the market. We felt like it was a little too small of a sample size, so we decided to add some things. Hopefully it'll feel a little bit more random going forward. So that's one of the things that we did. Earlier this year, we added a poop streak that will track not just the high valuation of the day if you hit it, but the low one. So when you hit the share button on the platform, it tells you how many consecutive days you've played with the rocket, how many consecutive high valuations you've hit with the money hat, and now how many consecutive low valuations you've hit per day with the poop emoji. So yeah, it's a fun way to keep track, and it uses emojis. So the other thing that we thought might be interesting for our users was to add a leaderboard. Because the high score and the low score is going to be the same for everyone in any given day, just based on the options available in the app or on the site. We had to think about, well, what is a high score? What does that mean in Bubbletron? And it's not about the score as much as it is how many tries it took you to get there. So now it's going to be whoever hits the high valuation in the shortest amount of attempts will be the leader for the day, and that's true for low valuation too. So we spent some time building a leaderboard, and I'm going to show it to you right now. Okay, we're back, and we're looking at Bubbletron here. We're going to hit the market and see if we can have some high score or some leaderboard entries here. Let's see. What would I want? Let's say I'm going to go for the money hat first. I'm a big fan of brain-computer interfaces. I think Bubbletron is too. Who doesn't like time machines? Maybe for babies. What do you think? So we're going to hit the market. And it is indeed today's highest possible valuation. I can now click post on the leaderboard, and you'll see add my initials there. So there are my initials. Hit submit. Now you'll see it took one try from me, and it also tells you the time at which I did it. So if two people both do it in the same amount of tries, the tiebreaker will go to who did it first. So you're going to want to hit Bubbletron on the reset, which is at midnight Eastern every day. So the platform will regenerate with new parameters each day at midnight. You might want to hit refresh when you're doing that. So that was just a quick look at what we've added to Bubbletron today. I didn't want to spend too much time on this. But yeah, we are tracking we're not just tracking your money hat streak. We're also tracking your poop emoji streak. So let's hit the low valuation before I get out of here. Let's do a crypto focused NFT. Yikes. For Republicans. Quadruple yikes. Let's see what happens here. Yep, hit the total lowest possible valuation, hit share, and yeah, you'll see it has one rocket, that's my play streak, that's my poop, that's my top valuation streak, and that's my low valuation streak. And you can just copy that and send it over to whatever platform that you're still using for social media. I want to thank everyone who's been playing the game over the last few months. Thousands of plays have occurred. And yeah, we have a solid group of players who are playing it at least once a month, if not every day. So yeah, like I said, the website does update every day. So at midnight, you'll get a new board, kind of like what Wordle does. And yeah, if you could share it, it's cool. This does not require any sign up, any login, any download of an app or anything. So we think it is a little more appealing than trying to get people to download an app these days, or try to download a game, or try to pay for a game. So that'll do it. Thank you for watching this shorter Bubbletron Direct here at E4 Remake. I didn't want to leave you guys hanging in this important week of announcements for video games. And yeah, it's our first game, so go give it some support. And yeah, thanks for watching, and do it for Shacknews. Wow, what an amazing video that was, and totally not hastily produced. And I didn't say 1,000 times, but you know what? I think we got the message across, and that's really what matters, right? So yeah, check out Bubbletron if you haven't already. It is a free-to-play, web-based game created by Shacknews for Shacknews users. And yeah, welcome to Game Trader Live. This is the second episode, and boy, have I not prepared for this. So we're going to kind of wing it today. I'm going to look at a lot of charts because we are at the end of the month, and we have some things that we can look at in that space. Let's go jump to the charts. Oh, that's a fail wheel. There we go. So here's the S&P 500. It's the daily chart. We had a big stinky day today, outside day to the downside. So you had a sell signal once it dropped below. If you look at the day, you know, it's kind of started on the highs and then kind of puked all day long. So you had a buy signal when it was above 5,490 and 81 cents, which was yesterday's high. And then when it broke below yesterday's low of 54.6754 cents, you had a sell signal to the downside. But if you look at it on the weekly chart, you got a little shooter here. Let's look at the monthly chart. Still looking pretty healthy on the monthly chart. The quarter just wrapped up too, so we can look at quarterly charts. I use a strategy called the Strat. It was created by Rob Smith, who passed away last year. It's based on 3 things. So essentially, the Strat combines 3 basic truths, and you can either believe them or you don't, but I can show you how it basically is true. Number 1, all stocks trade in a series of up and down trends across all time frames. So that's called the broadening formation. A lot of people like to think that there's like horizontal support for stocks. It's largely never the case that that's true. I can pull up a chart to showcase that here in a second. Yeah, I think a really good example of a broadening formation, as full disclosure, I own this stock, is Nintendo. Nintendo is it's been an uptrend since 2015. I believe it was around the time of Pokemon Go that they started to turn the stock around. It has bounced off of this lower uptrend only twice in the last 10 years. We are looking at a very long-term chart. There's also this other one. I call this higher trend line the Switch trend. And basically because it started with the launch of the Switch and it's continued since then. Earlier last year in March, Nintendo kind of traded right at the junction of a downtrend that began in 2020 and an uptrend that began all the way back in 2017. And you could see that was a pivotal moment for the stock. So that's a longer term trend line there. Yeah, shout out to fellow Nintendo shareholders in the chat. Another trend that I think is important to notice is this Tesla trend. This is a stock that's in a noticeable downtrend, and it has been for a few years. And I will say that, you know, on the weekly chart, you just had an inside week and up. So yeah, I did mention the broadening formation. So the second thing that is a component of the strat is actionable signals that are based on equilibrium breaks or stocks that are not in equilibrium. So the most basic way to show this is in a daily chart. Like this daily chart is perfect. You had an outside day on Friday. Or sorry, this is a weekly chart. Outside week last week, followed by an inside week. Or sorry, outside week 2 weeks ago, followed by an inside week last week. Broke out to the upside. So you had a buy signal when the stock got above 188 and 81 cents earlier this week. So if you caught that, you get made about $10 off of the trade. I'm not really very bullish on Tesla, so I would only use technicals to trade it. So why are we talking about technical analysis? I thought this was about investing, and it was about trading, and it was about understanding individual companies. Well, we got to trade the market we have, not the market we want, right? And 90% of the trading volume in the stock market is done by algorithmic trading. That's rules-based, computerized trading. So what if we could teach ourselves what the computers are looking for? Wouldn't that be useful information? I'm not saying to bet the whole farm on technical analysis. I'm just saying that technical analysis, specifically this strategy, can explain what's happening in price action, which is useful when you're trying to time the purchase of an investment. So yeah, Tesla's a good example of an inside week and up trade that occurred this week. But yeah, I wouldn't be buying Tesla here. And I guess watch this downtrend. So in the next few weeks, if it gets around 220, if it breaks out above that, then forget it. The downtrend may be over. Because we've seen that even in Nintendo, right? Like the Nintendo was in a downtrend. It was hitting lower low, lower low, lower low, lower low, higher low, higher low, right? We have not seen too much evidence of that because, you had lower low in Tesla, lower low, very low low, and then a higher low, followed by a lower low and a lower low. So a break of this very, very low 101.81 a share, I think would be the thing that causes this stock to really sell off. But we're not trying to predict things. We're just saying, where could this go and why will it go there? So that's kind of the goal of technical analysis. The third part of the strat is kind of confusing to people because it's a concept of time frame continuity. So you want to own stocks, like a good way to look at this is like, I'm going to try to find a stock that, I don't know if there are any stocks that are up on every time frame right now. There might be, but I'm not one that I'm watching. So I'm going to just show you the Microsoft chart and we can kind of go from there. Microsoft is up for the year, right? It's up 140% in a year, in this year. That's pretty crazy. It's up on the quarter. It's up on the month. I don't think it's green on the week. Yeah, it's not. I don't think it was green on the day. No. So what you're looking for, and this may just seem obvious, and if it does, that's fine. You want to buy stocks or be trading stocks from the long side that are up on every time frame, right? So if a stock is going up on the daily, weekly, monthly, quarterly, and yearly time frame, it stands to reason that everyone who is short that stock is losing money, depending on what time frame. So you want to, it's not that like you can only buy stocks that have time frame continuity, but when you detect one that does, it's almost like they just hand you cash because the computers are seeing it and there is no downtrend. The stock is at all-time highs or it's approaching all-time highs. So they just buy until it's exhausted. And I think we saw that with Nvidia here recently. If you look at the weekly chart in Nvidia, this stock, it had quite a run. 1, 2, 3, 4, 5 plus 5. No, 1, 2, 3, 4, 5 plus 6, 7, 8. 8 consecutive up weeks followed by 2 consecutive down weeks. And you also have a stock that on the longer term time frame, it's up 150% for the year. And that was last year it was up 238%. So you have a stock that's doing very well. You want to be on the winning side of the trade is the point. And time frame continuity can help you with that. So that's challenging because not very often are you going to have everything that's going great. I will say that time frame continuity to the downside is just as hard to find, but when you do find it, it's similar in that if you're buying put options on it or if you're shorting the stock, it will It'll keep going down because it stands to reason that's going to keep going down. So yeah, all these three things, actionable signals based on equilibrium breaks, uptrends, or long-term, or sorry, broadening formation, just the uptrends and downtrends. This idea that I think people would have looked at Nintendo, for instance. Let's go back to that stock. It's got horizontal support. Let's see, where would it have had horizontal support where it didn't? I don't know. This breakout here, maybe when it got above 10 in 2020, and then it's gonna hit the same level here. It dips. It did a little bit, but then it dips way below it. So it's like, okay, well, you made up this horizontal support line, right? And then it broke below it. But look what happens. They know. The market makers and the traders know that you're using horizontal support lines, and they're breaking right through it so that you panic sell to them and then they buy it, because these uptrends and downtrends are not horizontal lines. So you had multiple opportunities in early 2022 to buy Nintendo where everyone's like, oh, it's breaking 1080, it's breaking whatever, you got to sell it. Those were buying opportunities, basically all along that downtrend. And you didn't have evidence that the downtrend was holding for a few weeks, but, it stood to reason that, the Mario movie was doing well at the time. Why not invest in it? And then you did see, lower low, lower low, lower low, followed by a higher low. And at that point in November, you had confirmation that this thing was not going to keep puking down to this lower uptrend. And if you bought it at that higher low, you could have made about 40%, 50% in a matter of a couple of months. So yeah, Nintendo's an interesting stock because it's up on the year, it's up on the quarter. It had an up month after an outside month to the upside. Even was up on the week, just barely. Had an inside week and up. Didn't really do a whole lot there. Is it really trading for $13.94? I do not think it was there. Let me see. That's after hours trading. I wouldn't read too much into that. That might be a bad tick. So we're not gonna. Yeah. So yeah, it just jumps up to. It closed at 13.30. So yeah, it was not up on the day. No. Anyway. But yeah, when we're looking for time frame continuity, it was up on the. That is not right. This should be like here. But this is a stock that's actually has time frame continuity to the upside. It's up on every time frame. So yeah, you want to keep that in your back pocket. It's not that time frame continuity should guide you in or out of stocks, but it's just another data point that you can be like, well, at least I know that it's up on these time frames. So if I do see an opportunity, be it fundamentally driven or release driven or whatever, maybe Nintendo announces, oh, we're going to show everyone the Switch 2 tomorrow. Maybe that's your opportunity to buy into the stock because you already know, okay, this thing's up on every time frame. And then you look for actionable signals like an inside day or up or reversal strategy to the upside to get into it. I called out a reverse strat in Nintendo. I want to say it was a yearly rev strat. Let me find it. It might have been quarterly. Sorry, I'm looking at my charts right now. Yeah, there it is. It's get my chart back. There you go. So you can look back to the third quarter of 2016. That was a big move up. I believe that's when they showed us the Nintendo Switch reveal trailer. It then traded inside quarter in the fourth quarter. And then it dipped below the quarter's low, the fourth quarter's low. It dipped below that in Q1 2017, only to close back inside of that range. That is a perfect setup for a reversal strategy to the upside. That next quarter, when it got above split adjusted $6.19. It was an active buy signal. If you bought it there and just held for the quarter, you made about 30% in a quarter. And obviously that was a great entry point that you could have stuck in forever. And then you had another inside quarter, which then broke down to the downside. It wasn't an actionable signal, but it was a sign that exhaustion risk was happening there. So Nintendo did bump its head at its all-time high in December. It was like somewhere in the fourth quarter of 2020. But yeah, if you hung in there from this original buy signal, you got close to over 200% return in about 3 years. So it's not too bad. You're up 15%. Well, if you bought it when I told you to, what would you be up? That's the real question. So yeah. Oh, let's see, what else? Someone asked about alternative energy companies in I posted a thread. I didn't post a thread this month because I still had a lot of decent questions from last month's chatty thread. So someone was asking about alternative energy and like green companies. So I did some research in that space over the last few days, and I don't think it's a great time to be wading into this space at all. But there are ETFs for it. One is called FAN. That's for wind power related companies. And I found that like they're kind of being very vague when it comes to their definition of what a wind power company is. So like I went and I looked up some of the holdings for the FAN. It's called the First Trust Global Wind Energy ETF. They have Ørsted, Northland Power, EDP, Vestas, but they also have like large conglomerates like Siemens Energy and Hitachi. Nextera Energy is one of them listed. Owens Corning, Timken, General Electric. So it's like companies that make components for wind farms are also included in this ETF. It's not a great time for a few reasons. And I'll get to solar here in a second. But the reasons why I think it's not a great time, these were already quite low margin businesses, and interest rate environment where it's at has made it very cost prohibitive for most people, barring subsidies, to put a wind install on their property or a solar install on their property. But there are winners. I do think that the other thing going on is the tariff war with China is definitely hurting some of these solar companies. So you're looking at First Solar is kind of I would say like the premier solar company in the United States right now, and they're the largest part of the TAN. I know these are ridiculous. They have FAN for wind and TAN for solar ETFs over at Invesco. So yeah, like First Solar and Enphase are two of the largest solar companies out there. First Solar is seeing a very it's like they're coming up against very tough year-over-year comparisons. So they have struggled here in recent days even. The stock hit an all-time, I don't want to say it was all-time high. Let me make sure. It did. No. It's getting very close to its all-time high. So it hit an all-time high back in 2008 when oil was running of around $312.85. Earlier this month, it got to 306.77. So it did not make a new high. That's usually a sign of exhaustion risk as well. We're back within this big-ass bar here. So let's see if we close it all the way. Let's look at some other. It had a very good May, followed by a very rough June. Still up on the quarter and still up on the year. But as you can see, things have gotten messy. It's no longer running like it was. So if you look at the daily chart, That's the interesting thing about how the strat works. When you look at different time frames, you can see you'll see something break down in the shorter time frames first. So looking at the daily chart is why we're able to see, oh, this was the day that First Solar really started to sell off. Then you can go back and actually look at the news events around that time, and if there was like saber rattling about tariffs or the Federal Reserve spoke about interest rates. There's a lot of reasons why these companies are struggling. So I'm not recommending people buy any of these, but if you want to, like, what I would recommend is, like, if you're a person who does want to invest in alternative energy, I'm all for that. I think alternative energy is the future, but let's maybe be careful about it because we're in an election year. Tax policies could change, tariff policies could change, tax credits could change. So there's a lot of unknowns around this sector specifically. So what I would recommend people do is put together a watch list of companies that you're interested in the space. So I've talked about wind and I've talked about solar. On the wind side, I don't really think there's much to invest in there. And I don't really like ETFs, but if you're like, I have to invest in wind, diversifying in an ETF might make sense, but it might not because the whole industry's in trouble. In solar, I do think that there's going to be winners and losers, so maybe there's a better stock picking environment there. But the data does not really scream to me that you should be running into these stocks right now. So maybe create a watch list, watch the market for a broader sell-off, and maybe if these things really get hit, you can come in and buy them for cheaper than where they're currently trading, if that makes sense. So yeah, First Solar down on the day, down on the week. I have a question from the chat. From Greg. Greg asks, how will the election affect the market? Here? Question mark. And Trump is a climate denier, for example. How will it affect? So it's complicated. It's very complicated. It's not that the presidential election will not have an impact. It will, but it didn't in 2020. And you would have thought it would have. Okay, based on all the unrest that happened on January 6th following the election, you would have thought that Trump losing in 2020 would have caused more market volatility. Now, Trump winning in 2016 did create market volatility. And you could argue that he's volatility incarnate because he's so flippant with some of his attitudes and he will change his mind rapidly. But yeah, like, I don't know. These companies survived a previous Trump administration, most of these. So I wouldn't be surprised if they're able to handle it again. I think that it really depends on how levered to China these companies are. If they're able to make these things elsewhere, I think they'll be able to do okay. But to your point, with a Republican president, forget who, with a Republican Congress, they will undoubtedly repeal whatever tax incentives that already exist, and they'll make it harder for new ones to be, new tax credits to come out. So that will hurt the whole industry. And then also the Federal Reserve interest rates where they're at right now also hurts this industry because their margins were already low. And if you're a person who has to finance these purchases, because they're pretty expensive to put a solar array on your house, it's like buying a roof, and like a battery pack and all that stuff. These are expensive purchases that may require financing. And if you're buying things with financing right now, you're paying a higher interest rate than you have in years. So these companies will not be as profitable. And I guess it's just a long way to answer your question. Trump will be a negative for some parts of the market. Oddly enough, I think the semiconductor industry is the most at risk when it comes to Trump, because he can say and do things that would affect our relationship with China and also the safety of Taiwan, which is, Taiwan Semiconductor makes so many chips. I hope that answers your question, because I think it's a very good question, but it's very hard to give a definitive answer. And there's times, and I guess my point is it depends. There's times where an election will cause volatility, and there's times where it won't. See, I think you look at history, but then you also just look at the facts. And like you said, Donald Trump is a climate denier. He has previously let tax credits on electric vehicles be repealed. So yeah, I do want to mention electric vehicles before we move on from this, but we wanted to know the alternative energy sector. I feel like right now, when it comes to investments, there's wind, there's solar, there's battery, and then there's electric vehicles. And Tesla is a play on both battery production and electric vehicle production. So we're talking about, the largest automaker in the United States now by market cap. They're the largest EV producer in the US. They are seeing a ton of competition from China. I just do want to mention in general, when I was preparing for today's episode, I came across a bunch of alternative energy companies that were based in China. I'm never going to recommend Chinese stocks on this show. It's not because I have some sort of nationalism or anything. It's I don't trust the accounting standards of the Chinese government. I don't trust the auditors in China, and I think that some of these companies are incentivized to lie, to trick Westerners into investing. So I don't. It's mainly because I don't have confidence in the fundamental analysis that I wouldn't recommend them. But, if you're a trader, you could use the strat and trade them if you wanted to. I choose not to. But there are some, BYD, there's some Chinese EV makers that are really, really making competitive products for Elon and Tesla to compete with in China. And also now in Europe. It seems like they're doing pretty well over there as well. So we do have tariffs that are preventing a lot of Chinese-made EVs from coming over here. So Tesla is still benefiting from the boondoggle that is the Inflation Reduction Act, because they make batteries in America, they make cars in America. They've kind of tapered the production in Europe, and they haven't mentioned the Mexico Gigafactory lately. So they really do seem to be leaning in on their building stuff in America, building stuff in Texas philosophy. So yeah, let's say that Tesla is the number one EV company to pay attention to. I would not invest in them here, but they are a stock in the alternative energy space. And forget the vehicle side of it. Tesla is going to become the largest maker of lithium cells, battery cells on Earth. So even if you don't like their cars, which a ton of people don't, I think there's a battery business and a drivetrain business and a charging business and a storage business that are all going to do well, even if things like the promise of full self-driving vehicles never come to fruition. So yeah, there's your take on Tesla for this week. Rivian is another company that I have on my personal watch list because I think Elon Musk has done a disservice to Tesla shareholders, and he's hurt the brand with his antics on Twitter, and even just the act of buying Twitter I thought was a bad move. But yeah, Rivian had some good news this week. Volkswagen took a $1 billion stake in the company and also announced a $4 billion joint venture project. It's kind of a good news, bad news situation here. The bad news is that they needed to raise this money because they're on the verge of bankruptcy. They do have cash on hand now, but they lose a lot of money. They lost nearly $5 billion last year from operating, and they're in between generations of vehicles right now. So they're losing money on each vehicle they sell right now, and this $1 billion capital infusion is definitely going to be welcome. Hopefully, it gets them across the finish line. I wouldn't be buying a stock because of this news. But I do think that Rivian is interesting here. I think that they stand to be the beneficiary of all the bad Tesla news. But also, I just think that this isn't really a stock opinion. But I just think their vehicle looks nice compared to the Tesla. I don't know. Can I just open this in a new tab? Here you go. Like, that's not the worst thing on earth. Yeah. So yeah, Rivian is something I think to pay attention to. I'm not buying it here. I wouldn't buy it because Volkswagen took a stake. Because we've seen Ford took a stake, Amazon took a stake. It hasn't really panned out. Most of those companies have sold most of their holdings in Rivian. I think EV trucks in general don't tow very far. Let's see, the R1T range. Sorry, this is turning into an electric vehicle show now. It says estimated range of 270 miles. But with towing, it's probably way worse. Their expected range for the SUV is around 312 miles. And I do agree that towing uses a lot of energy, so these may not be the best thing from a towing perspective. But yeah, I think Rivian's a stock to watch in this space for sure. Yeah, no, you're dead right, man. And I think if you're towing stuff, your range could drop, by 200%, or by like 60% or something. But this is a well-made vehicle, and I think that comes back to energy density. So as these packs get denser, maybe they'll actually be able to hit 500-mile range, to then your point where, like, okay, I'm getting 60%, or even 40%. It's like I got 200 miles to the charge when I'm towing. You know what I mean? So I think that's more of a give it time kind of thing, Greg. Over time, I think efficiencies will make electric vehicle trucks a more viable option. But the R1T, I think, is still a better product than the Cybertruck at this point. So yeah, keep an eye on Rivian. There's some other stuff going on in alternative energy spaces. There's like tide power. There's hydroelectric power. There's geothermal. There's not a whole lot of like pure play stocks that I could recommend for that space. So what I would recommend is like take a look at some boring companies like Siemens or GE, because they make components for a lot of these things. Although I don't think I would ever recommend GE to anyone. They've done a terrible job managing that conglomerate. But yeah, those are kind of like, there's like tangential bigger conglomerates that you could go to if you really want to. I wouldn't. But yeah, that was us getting to know the alternative energy sector. Let's see, what else do we got going on here? Someone asked if I can explain puts versus calls, but like for a 4-year-old. I've done this a billion times, so I'll do it. So there are options or derivative that you can trade on stocks. So they're basically bets that you can place about the price of a stock on any given day. So they tend to expire on Fridays. There was an expiration this week, for instance. So yeah, each week there are options that expire. Those are called, that's like the month. Explain it to me like I'm 10. Yeah. So a put option is the right to sell when you buy it. It's like buying insurance on a stock. So for example, like we were looking at, Rivian, it's at 1343. Let's say I just want to make sure I don't lose beyond 13, whatever. I can go out and buy the $13 put in Rivian. And then let me look at a specific expiry. So like, RIVN. Let's say I want to protect my position over the July 4th weekend. So you can buy the $13 put strike in Rivian for 36 cents. So you're essentially locking in that if the market crashes in the next week, I will be able to sell Rivian for $13 minus the 36 cents I paid for the insurance. So that would be a sales price of $12.64. Got it? So this is where it gets weird. You can buy and sell put options. So someone is buying that put option when you're buying the put option. Someone's selling it to you. And they either already owned it and they're locking in a gain or they're taking a loss, or they're selling to open the position. And that means they're essentially saying, I want to buy Rivian for, if it drops below 13, I'm going to buy it for $12.64. So that's a bullish position. That's what's weird about puts and calls, is that it depends on if you're buying to open the position or selling to open the position. Buying to open the call, or buying to open a put option position, is buying insurance. You're either doing it because you think the stock's going down, or you're doing it to protect an existing position. Selling a put option creates not a right, it creates an obligation to buy that stock at the strike price minus the premium paid. Does that make sense? So that's put options. Good? Okay. Call options are the right to buy a stock at any given price on any given expiry. So we'll go back to that same example of Rivian. Let's say that I'm bulled up on Rivian. I think Volkswagen buying them is the best news ever. I'm buying call options, and I think it's going to get above $13.50 by July 5th. I go out and I can buy that call for 53 cents right now. So that means I break even if it gets to $14.03. But it creates a right for me to buy the stock at $13.50. Actually, sorry. If it goes above $13.50, I have the chance to buy it for $14.03 essentially. So it's a bullish bet. But like I said before, there's two sides of the trade. So you can buy to open a call position. That's a bullish position. You're expecting the thing to go up in value, or you're hedging a short. Selling a call option creates an obligation to sell. There's naked call option selling, which you've seen in GameStop. And then there's covered call selling, where people will own the stock, sell calls on it to create some kind of income where they take the premium in. But what it does is it creates an obligation to sell if the stock goes above that strike price. So, right, if you buy to open an option, that creates a right. If you sell to open an options position, that creates an obligation. Hopefully that makes sense. So, call options, that's a right to buy when you buy to open. That's an obligation to sell when you sell to open. Put option, that's a right to sell if it drops below a certain strike price, and it's an obligation to buy if it drops below a certain strike price. That's the best I can do. Hopefully that made sense. Let's see. Got people asking about other stocks. We can take a look at some of these charts. Let's see what happened to DraftKings. Yeah, DraftKings is up since that person bought it. Someone wanted me to take a look at DraftKings stock. So, it's down on the week. Let's see. DraftKings, oof. It's given up a lot of its gains for the year. Inside quarter. Okay, well, you have a risk range to pay attention to for the next 3 months. If DraftKings drops below this last quarter's low of 34.40, that would be an active sell signal for the next 3 months. If it breaks out above 47.74, which is last quarter's high, that would be a buy signal to the upside. This is an inside quarter. So there's only 3 outcomes here. It can either break out to the upside, it can break down to the downside, or it can stay back inside this range. And sometimes it does both. It'll break out above and below, and then it creates a outside bar, which we have seen in other examples that I've given earlier in this stream. So yeah, DraftKings is looking okay. You don't have an actionable signal, but you do have an inside quarter and inside month to pay attention to. So yeah, inside month, we're talking a break of that low of 34.57 June low, or a break above 44.62 would be the buy signal on the upside. As I've said before, America is addicted to gambling, and this is one of those stocks, so I guess we can pay attention to it going forward. People are going to want to know what I think of Nintendo. I think they're doing very well, honestly. Better than I thought this year would go. So yeah, you have a stock that it's up on the year. We mentioned this before. It's got time frame continuity going for it. Up on the month, up on the quarter, up on the week, and even up on the day. We know this is a bad tick. It was like here. But yeah, so things are going pretty well for Nintendo. I don't really have much else to say about it. You don't really have an actionable signal or anything. I think we're all going to get our dividends soon, so that's nice. But I don't have a whole lot else to say about Nintendo here. Let's see what else we got going on. This is a good question. So someone asked, what's the difference between the tax implications for short-term versus long-term stock sales? So a long-term stock trade or sale is if you held something for a year and a day, you get a preferential tax treatment. So long-term capital gains, let's see, is currently... It's a little weird. So if you're a single person, the first $625 that you make from a long-term capital gain is not taxed. It's taxed at zero. That was 2023. For 2024, it's up to $47,025. No tax. The next, from $47,026 to $518,900, you're taxed at 15%. And over $518,900 in gains, you're taxed at 20%. So even at the highest tax rate, you're still much lower than the marginal tax rate, right? Marginal tax rates for 2024. So this is for individual taxpayers. So that same, the 20%, right? If you held it for a year and a day, you're getting taxed at 20%. For an individual, you're taxed more on income over $11,600 than you are a capital gain of $47,000. You're taxed at 12% on that income, at up to $47,150. Incomes above that $47,000 level are taxed at 22%. So right there, you're already paying higher taxes on ordinary income than you are capital gains, just in the second bracket. The highest bracket is for individuals who make over $243,000 in a year, and they're taxed at 35%. So going back to the question, a trade that occurs in less than a year, right? Less than a year or less, 52 weeks, is taxed at your ordinary income rate. So that's your marginal rate. For most people who are trading stocks actively, you're probably paying over 22%. So if you turn an investment into a trade, you could be paying up to 15% more in taxes. But if it's a trade it. I'm not telling you. If you have a thesis and you're saying, I'm going to trade it and here's the catalyst and I'm going to do it. Pay the taxes. But if you're an investor, you don't want to sell because then you have to take out 20% of your money that you had in whatever position. So I think a lot of people are disincentivized to sell on that side. Another note I think is kind of interesting about this: short selling is never considered a long-term capital gain. So short sellers are incentivized to never cover. Where have we heard that story before? Yeah, I don't know. Maybe some used video game retailer. But yeah, so there's an incentive to not take short-term capital gains, for sure. But if you're a trader, I would rather take the short-term capital gain than hold on to something that isn't going to make money in a year, right? So if you especially like options trading, if you're up on something, you take the gain and you run, because most options expire worthless. Fun fact. So yeah, we're getting a question about NVIDIA from the chat. RMS Squires is asking a question about NVIDIA. It's having a bad week. But yeah, outside of the weekly chart, it's still intact. I don't know. At some point, I guess we want to say that this is a parabolic chart, which I know my mentor's ears are still bleeding from me saying that. But it is, I don't know. It's hard to look at that chart and say it's... I think almost everything is more volatile than Nintendo, if that's the question. Nintendo is... There's a reason why I put most of my money in Nintendo. I can go to sleep at night and not worry that the CEO is going to, trend tomorrow for something. Or I don't think Shintaro Furukawa is out there signing boobs or anything yet. Although we did see Jensen Huang doing that. Let me see if I can pull that up for the folks at home. Jensen Huang signing boobs. Yeah, let's take a look at this. Look at this guy. Just look at him. I guess what I'm getting at is I wouldn't bet against Jensen Huang. I think he's a great CEO. He's done a very good job running that company. I feel like they've done an amazing job of pivoting. They were the VR company, right? They were the computer vision company. They were the autonomous driving company. They were the crypto company. And now they're the AI processor company. I think they've just done a very good job of placing bets that have paid off for them. So from a fundamental perspective, I think the stock can go higher. And I know it sounds kind of crazy. I said that before when it was around 900. I had an internal, just at my company, I had an internal target of 150 split adjusted. At the time it was 1500, but they did a 10-for-1 split. And obviously that 10-for-1 split was met with some selling. I don't think it matters at all. It's really a function of, are they going to run it? There's like two concerns, I guess. Maybe three. One, they run into like a demand cliff where all the LLM trainers are done buying H100s or H200s because they just need to now train. Or two, some of these AI companies go under and then they start putting H100s out on the market, and I'm seeing that you can like rent H100s now. They're out there, and there's H100s on eBay and Amazon and stuff. So I do think that failed AI companies are a risk for NVIDIA because that's less customers. And then I think the third one is that someone makes a more efficient way to do this with a different processor tech or something else. And I think Apple's kind of interesting in that respect because they did kind of imply that that their private cloud is not running on NVIDIA hardware. It is their own Apple silicon that is powering their servers, not just their devices. So I think that's kind of interesting that there's a chance that someone else will come in and compete with them. I think Qualcomm is trying to do that. AMD is trying to do that. So there is some risk that competition will show up, but I think it's kind of like a situation right now where everyone can eat. There's not enough supply of these chips, which is why NVIDIA is able to charge such a ridiculous price for them. So until those things change, I wouldn't sell the stock. My family does have some shares of it. I did buy it around 900 earlier this year, so we're doing okay on it. But yeah, I don't think I'm going to dump it just yet. I do think that it's the poster child of this current phase of the market that we're in. In my opinion, this is like, it's the stock of this era. And, you know, we've seen headlines like, oh, you know, it's done more than, it was a higher market cap than Microsoft, and, you know, whatever else has happened. But yeah, I think Nvidia, still leadership position. There's nothing really to watch for because it hit new highs this month. It hit new highs this quarter, obviously this year. On the daily chart, you know, it had, okay, so on the daily chart, you have a potential rev strat to the downside. So here's the first bar, second bar traded inside of it, third bar went above it only to close back inside of it. So you have a chance of a rev strat to the downside if it breaks below today's low of 122.75. Now, it's important to point out that these actionable signals are tied to their time frames. So when I say there's an actionable signal to the downside, that signal is only valid for Monday. If the stock goes down on Monday, let's say it goes down to like 120 or something, you will, the only way that you can have that signal still retain some value is if the next day it continues. It's called continuation. So whatever the low of Monday will be, if Tuesday breaks below that low, you can get back in and pile in. But if you're doing like a daily time frame trade, you should probably be out of the trade by the end of that day. So Monday in this case, but the range that we're looking at here would be if it breaks below 122.75 to the downside. And let's see if there's anything on the weekly chart. No, nothing on the weekly chart. Nothing on the monthly chart. No. But yeah, on the daily chart, you do have it's a potential rev strat setup. It is not a rev strat until the next day when it breaks down below it. So this is just me alerting people to a potential actionable signal, not an actionable signal yet. Let's see what else we got going on. Did that cover Nvidia for you, Squires? Cool. Someone asked, where are we at on the VIX? And I'm probably gonna get in the habit of looking at the VIX chart every episode that we do here. It's not, I don't know. It was up today, down for the week, down for the month, but it did trade inside month. So we now have a risk range to watch for the VIX. A breakdown below 11.87 would be a sell signal for the VIX. I doubt that happens. And this is on the monthly chart. You know, it is possible. July is kind of a low volume month. People go on vacation. A lot of the D-bags on Wall Street are at the beach. So yeah, this would be a bullish signal for the VIX would occur if it trades above 14.31 in the next month. So there's your risk range. And like I said, it could go above it, it could go below it, or it could just stay inside of it, right? Or it could do both, go above it and below it at the same damn time. So we're not trying to predict what it will do. We're just saying, if it does this, this is what you do. If it does this, this is what you do. It's kind of counterintuitive to look at the VIX, because if the VIX is going up, it usually means that the S&P 500 is going down, because this is basically what is used to determine the cost of buying insurance, those put options on the S&P 500. So yeah, you do have a risk range to pay attention to with respects to the VIX. Yeah. So there's your look at the VIX for the week. Someone wanted to look at, we already looked at Nintendo. So I'm not really one to talk my book at all. But I bought a stock today. Would you like to know what stock I bought today? No? Okay. Never mind. You sure? No? Okay. No one wants to know. That's fine. Let's see. Is there anything else? I'm sure there's someone watching this on YouTube that's screaming at their phone, I want to know. So maybe I'll tell you. Yeah, I bought a speculative position in a stock today. Okay. Because I know someone on YouTube's going to be mad if I don't at least say what I did. I bought some shares of GoPro. Now, why? Why would I do such a thing? I think it's getting kind of ridiculously cheap. Now, it's cheap for a reason, right? We're not... Let me close off that. We're talking about a multi-year downtrend. The stock peaked at 90... I want to say it was like 99 or 97 a share. Yeah, 98.44 a share way back in 2014. It's currently trading for $1.43. I picked up a small position in this stock today. I think it's interesting. This is not me recommending that you buy it. I also mentioned that I think this is a speculative position. So I took a very small amount of money and I initiated a small position. But I will be watching it going forward. They are, at the very least, they have a brand. The company's currently valued at $216 million. It's trading at a discount to its sales. They have revenues of around $800 million a year. And it's even trading at a discount to its own book value, which I find very rare when it comes to consumer electronics companies. So I think it's kind of interesting that, if they were to liquidate today, I'd stand to make like a little over 10% on the stock. So I do like going back and using some fundamental analysis. The problem is, and this is a concern whenever I'm buying a beaten down stock like this, is that, yeah, it has a book value of $1.48 per share, but its book value could be impaired if they continue to lose money or whatever. But yeah, a nearly $1 billion revenue company with, maybe not the best IP, but a brand, trading for near $200 million. I just think it's kind of low. It's not a short squeeze candidate. It only has a 5% short interest. That's not that crazy. It's only held 2.3% held by insiders, so it's not that crazy. Only 59% held by institutions, so that's the area where you could see more investment, maybe. But yeah, it's a beaten down company in a beaten down space with a lot of competition. But I think that it may be of value to an acquirer down here, or maybe they themselves can turn it around. But at these valuations, you have to think that like a Chinese OEM that makes GoPro knockoffs probably has enough money to just buy GoPro and relabel their knockoffs GoPro at the very least. So yeah, I took a very small speculative position in GoPro today, and I will update people as that story continues. But I have very few stocks right now, but obviously I think it's safe to say that I'm buying GoPro closer to the lows than the highs. By definition, it can only go to zero from here, so that would be a loss of $1.40 compared to, if it get back, it's not getting back to its all-time high. But if it did, by some miracle, yeah, we're around $97 away from its all-time high. So I think it's closer to the floor, but it's entirely possible that it doesn't survive. But these are the kinds of companies that I do look for: beaten down brands that are not they're not in the verge of bankruptcy. They do have cash on hand to pay off their debt, and they've streamlined their company quite a bit. But gonna keep an eye on it. They're trading where they are. They're trading where they are because of what they've done. So clearly they have not executed well for the last 10 years. But I think it's worth a flyer at this point. Like I said, not a very large position. But maybe it will be down the road. Maybe I'll add to it if we get some actual fundamental information that things may be turning around. I think it's an interesting company. So yeah, there's your this is a stock pick for you. This is not going to be a show of stock picks, but there is a stock pick for you. Figured I'd mention it because literally did that a few hours ago. Let me check on the article thread and see if anyone is in there talking. Nope, they're not. Why would they? It's a Shacknews article. RMS was in there. Cool. Any questions from the chat? I'm going to take a look at some more charts before we get out of here. Oh boy, look at Intel. It's trying to find a bottom. Oh, sorry. Here we go. Check out Intel. This stock is trying to find a bottom here in the 30s. But I mentioned earlier, everyone's like, oh, horizontal support, horizontal support. It's like, no. There's a downtrend here. There's one right here. It could drop into the mid-20s. And you also have a failed uptrend, right? So that failed uptrend is now going to become resistance for this stock. So I don't see it getting above 41 here in the next few months. Yep, you're good. Going to go exercise. Awesome. Yeah, so Intel sitting here in Turd Town for a reason. But yeah, someone asked me to look at that, I think, last episode. And, you know what? Maybe it's time we look at the GameStop chart. Is it that time? GameStop chart ended the week with an inside day. Did not trade inside week, but interestingly enough, we have a Rev Strat week setup here. So you had the week of the 14th, where it traded from a range of 33.70 to 22.79. Last week, we traded inside of that range. And then this week, we dropped below that range only to close back inside of it. Which means that, by closing above 23.51, we have a potential rev strat to the upside on the weekly chart if it gets above 26.69. So that's the number to watch for next week. This was an inside month for GameStop. So now we have a risk range to pay attention to the upside and the downside. So you would have a sell signal below 22.55 per share. And that would be active for the entire month of July. Conversely, you would have a buy signal above 48 per share, which was the high of the month for GameStop. That's a very large range, and it's entirely possible that we just trade inside of it again. But it is something to pay attention to. We're currently closer to the low side, so maybe we even get a potential rev strat setup going into August, but we'll just have to watch. Quarterly, you had an inside quarter and up buy signal that just extinguished. Above 17.59 a share was your signal for the quarter. And if you bought that, you could have made 300% in a short period of time. Obviously, it sold off, but you would still be up if you got in from that signal. And then the yearly chart also has a rev strat buy setup, which is not active right now, but above 27.65, you would have a buy signal on the yearly chart. So GameStop is certainly set up for a very interesting July. I don't know where it's going to go, but I have given you the range to pay attention to for if things happen. Either way, to the downside or the upside. And that's the nice thing about the strat. I'm not here trying to predict anything. I'm just here to tell you what will happen if something else happens. But I'm out of the predicting game. I am here to explain what is going on. So that's it. I think I have done it. I think no one else has any questions in the chat. No, I don't think so. Would you like to rerun the Bubbletron Direct? I think so, right? Yeah. I think we should do that. So yeah, I'll sign off and let you watch a video that I recorded right before I went live. But thank you for watching. If you like this kind of content, you can find us over on YouTube. There will be a VOD uploaded over there. You can join our Discord to talk about stocks. We have a channel dedicated to finance talk. You can join Shacknews Chatty, where there are threads about finances sometimes. Follow us here on Twitch. Follow us on Twitter. All these things over here. You can follow us. We're on TikTok for now. So yeah, that's the show. And as I think this is going to be my sign off. Manage your risk. Manage your risk. Please, for the love of God, manage your risk. Manage your risk. Manage your risk. Please. And yeah, give us a follow. Do all those things. Thank you for watching. And yeah, stay tuned for another special presentation of the Bubbletron Direct. Hey everybody, it's Asif Khan, CEO, Editor-in-Chief, and EIEIO over there at Shacknews, and I'm happy to be here bringing you another Shacknews Direct. We're just going to focus on Bubbletron today, which is our game that we launched on January 1st. So it's been officially 6 months since we launched, and it wouldn't be a E-Week or E4 without some sort of development update from Shacknews. So yeah, we are adding a couple of things to Bubbletron today. If you're a user of the game, you'll be happy to know that we're adding more parameters, so there'll be more options for you to be able to, choose what company you want to create and hit the market. We felt like it was a little too small of a sample size, so we decided to add some things. Hopefully it'll feel a little bit more random going forward. So that's one of the things that we did. Earlier this year, we added a poop streak that will track not just the high valuation of the day if you hit it, but the low one. So when you hit the share button on the platform, it tells you how many consecutive days you've played with the rocket, how many consecutive high valuations you've hit with the money hat, and now how many consecutive low valuations you've hit per day with the poop emoji. So yeah, it's a fun way to keep track, and it uses emojis. So the other thing that we thought might be interesting for our users was to add a leaderboard, because the high score and the low score is going to be the same for everyone in any given day, just based on the options available in the app or on the site. We had to think about, well, what is a high score? What does that mean in Bubbletron? And it's not about the score as much as it is how many tries it took you to get there. So now it's going to be whoever hits the high valuation in the shortest amount of attempts will be the leader for the day, and that's true for low valuation too. So we spent some time building a leaderboard, and I'm going to show it to you right now. Okay, we're back, and we're looking at Bubbletron here. We're going to hit the market and see if we can have some high score or some leaderboard entries here. Let's see. What would I want? Let's say I'm going to go for the money hat first. I'm a big fan of brain-computer interfaces. I think Bubbletron is too. Who doesn't like time machines? Maybe for babies. What do you think? Should we hit the market? And it is indeed today's highest possible valuation. I can now click post on the leaderboard, and you'll see add my initials there. So there are my initials. Hit submit. Now you'll see it took one try from me, and it also tells you the time at which I did it. So if two people both do it in the same amount of tries, the tiebreaker will go to who did it first. So you're going to want to hit Bubbletron on the reset, which is at midnight Eastern every day. So the platform will regenerate with new parameters each day at midnight. You might want to hit refresh when you're doing that. So that was just a quick look at what we've added to Bubbletron today. I didn't want to spend too much time on this, but yeah, we are tracking not just tracking your money hat streak. We're also tracking your poop emoji streak. So let's hit the low valuation before I get out of here. Let's do a crypto focused NFT yikes for Republicans, quadruple yikes. Let's see what happens here. Yep, hit the total lowest possible valuation. You hit share, and yeah, you'll see it has one rocket. That's my play streak. That's my poop. That's my top valuation streak, and that's my low valuation streak. And you can just copy that and send it over to whatever platform that you're still using for social media. I want to thank everyone who's been playing the game over the last few months. Thousands of plays have occurred. And yeah, we have a solid group of players who are playing it at least once a month, if not every day. So yeah, like I said, the website does update every day. So at midnight, you'll get a new board, kind of like what Wordle does. And yeah, if you could share it, it's cool. This does not require any sign up, any login, any download of an app or anything. So we think it is a little more appealing than trying to get people to download an app these days, or try to download a game, or try to pay for a game. So that'll do it. Thank you for watching this shorter Bubbletron Direct here at E4 Remake. I didn't want to leave you guys hanging in this important week of announcements for video games. And yeah, it's our first game, so go give it some support. And yeah, thanks for watching, and do it for Shacknews.